Joseph, Wonga has expanded hugely in the last few years, promising to be something really different in the subprime lending market. News today that it's been fined. Is it quite as different as it says it is?
Well, it's one of the oldest tricks in the payday lending book, which is to basically send out bogus lawyer letters. Wonga was fined or agreed to pay £2.6 million in compensation to victims who were, sent letters from Cheney, D'Amato and Shannon, who didn't exist. And yeah, it kind of belies their claim to be this really disruptive force.
But do companies like this need to do that? Is it necessary in that line of work? You can argue about the morality of lending sums at very large interest rates, but in that line of work, do you need to be sending out bogus lawyers?
Well, yeah, I mean, this line of work has been around for centuries, yeah? And, there are plenty of people who don't use banks today. And if you look at listed providers of sort of small, short-term, unsecured consumer loans, like Provident Financial here in the UK, and International Personal Finance, which has an emerging markets business, they have returns on equity of like between 25 and 35%. The gross margin is like pretty good. So the question is, do you really need to essentially charge lawyers fees without paying lawyers in order to cream off a little bit more? I don't see that need.
Yeah, it certainly doesn't look good. And reputationally for Wonga, it's a huge blow for a company that had tried to portray itself as much cleaner.
Its tagline was straight talking money. So yeah, there is absolutely extensive reputation risk here, but also regulation risk. Because in the last 18 months alone, about half of the UK payday lending market has dropped. Of 240 lenders, half have kind of fallen out of the market. So it's already taking a big hit from tighter regulation, and events like this aren't really going to decrease the pressure.
So a tough market, regulatory risk, and now sort of reputational risk as well. Wonga is still owned by venture capital. At some point, they will look to exit. What does an exit route look like now for the Wonga owners? Must be tough.
Well, I mean, it's like, you have to go back to this disruptive message, because they've already cut costs by being an online operation which uses sort of fancy data engines and algorithms to process credit and so on. So let's say you want to shift off to private equity. Can they cut any more costs? It may be a volatile or a cyclical industry, and again with the regulation stuff putting through. So the options out here do look quite difficult.
Well, it sounds like Wonga's easiest days are perhaps behind it. Joseph, thanks very much.